where a lot of these developing economies, it could be a 3-year cycle where you go boom and bust. Do you think that there is something to do with that, that saving for a rainy day is such that they know that rainy day for sure is coming, a lot more than maybe Americans who say, well, we'll get through this somehow. We've never really had a big boom.
That's the psychology of relatively high savings rates in emerging markets and in developing countries. This is really contrary to often belief, right? In lower income households in emerging markets have less discretionary spending income. That is absolutely true. But they do save a disproportionate portion. And it is for the reasons that you are mentioning. They have to. They need to build a fund for the rainy day. They need to save up for bigger type of expenditures because they don't have the type of financial services that we all take for granted, right? We get our income or we get our paycheck on the 1st of the month, and then we pay our mortgage or our rent on the 5th of the month. So our cash flow spikes are nicely aligned, and we have insurance coverage if something happens. If you are economically active in the informal economy of an emerging market, you have none of that. And frankly, life is tough to begin with, and the lack of access to these type of instruments makes it even more hard. It is expensive to be poor. And that's partly why we are working on the formalization of financial services. And that's why we pushed, as Arjun and Em said earlier, the formalization via, this is an emerging markets perspective, the formalization via gig economy platforms, because that brings people closer to a steady income and greater resilience.